these banks are more inclined to say yes on hospitality. So just wanted to talk today about a really amazing structure. We're structuring these deals right now and we're having a lot of success. And many banks don't offer Pari Passu. All day long we seek out relationships with banks that get it, that know how to put together a capital stack. We bring in the 7A piece, the conventional piece, the base piece, put it all together, get great high leverage financing, bring in less equity, LP equity, which means higher returns for you, the developer or the GP.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Bo Eckstein. And on today's show, we're going to talk about an SBA 7A loan with a Pari Passu conventional piece. And this is an excellent loan structure to maximize SBA and to get more proceeds for your real estate related. Typically on something like this, it might be a ground up hotel project. It could be self-storage. It could be anything owner user where the owner is going to occupy, a given 51% of the property. But the way it works, Pari Passu works great because you have your conventional piece and then you have your SBA piece, and they're recorded both as a first lien on the subject property. But what that enables you to do, you're capped at $5 million in SBA proceeds on a 7A. So let's just say you were building something and your total cost was $9 or $10 million. So in theory, you can have a $2.5, $3 million conventional piece with a $5 million SBA piece, and you're getting 80% of costs for the project. And SBA is really, really pushing right now, especially to keep the economy stimulated because of COVID and coronavirus. So a lot of banks are pulling away for hospitality and different construction projects. So if you have an owner user type construction project, this is a great way to capitalize the project. And if you find the right stack, hypothetically, you could put together a Pari Passu conventional loan with an SBA 7A, and then also put in, if it's in an eligible state and jurisdiction, put in C-PACE financing. So essentially, you possibly could be at 15% sponsor equity into the project. High leverage, great financing terms. You don't have to go the private debt fund route if you're having trouble with getting leverage or getting a bank to want to do the financing. Right now, banks they're opening back up, I should say, for hotel financing, but it's difficult. But when the SBA comes in and they're going to guarantee a large percentage of that loan, these banks are more inclined to say yes on hospitality. So just wanted to talk today about a really amazing structure. We're structuring these deals right now and we're having a lot of success. And many banks don't offer Pari Passu. All day long we seek out relationships with banks that get it, that know how to put together a capital stack. We could bring in the 7A piece, the conventional piece, the base piece, put it all together, get great high leverage financing, bring in less equity, LP equity, which means higher returns for you, the developer or the GP. Anyhow, hope you enjoyed this episode. Hope to provide many, many more topics that are going to be interesting for you to learn how to structure deals. And SBA is a tool for anything owner occupied, a franchise, hotel, self-storage, expanding a childcare, starting a gymnasium for kids. So many uses, guys. Thank you so much for watching. Please subscribe, share, like. If you're listening on iTunes. Thank you. Be sure to share and download these episodes. Thank you so much. Leave a review too, please. Leave a comment below. I want to hear from you.